Good morning, Jitendra. Thank you very much for joining us. Markets in a very, very interesting position where you want to know whether all the good news is factored in or whether you want to be brave and factor in future good news. Where do you stand? You think this is a buy on every dip? What is your 12-month target for this market?
Well, into the year end, our formal target is about a 3% upside. So, it goes back to saying that, probably a lot of the good news is probably discounted for the near term. The long term is, of course, another story in a sense that we do see the earnings growth starting to perk up a little. The first quarter numbers itself shows at least that, you're seeing growth move in from that 10-12% kind of band to probably around 14-15% kind of range now. And the other heartening factor about markets has also been that this time around, after a really long time, I'm seeing that the broader indices, BSE 200, 500, for example, they have been showing a slightly more resilient or a higher growth than the frontline names. So it shows that, the pickup is more broad-based, it is more pervasive now. So I am definitely constructive, but near term, I guess a lot of the good news is getting priced in right now.
Jitendra, hi, good morning. Well, the last time when we spoke with you, you had indicated that you're underweight on India. Since then, would you change your stance because of, so many things on the ground that have improved? Crude prices have fallen significantly. That will actually help rein in the fiscal deficit as well. Would you change on your stance based on the macro improvement?
Yeah, well, we already changed it post the election verdict. So we are we are neutral on India at this point of time. And as I mentioned, when we had done the change, we are forecasting somewhere in the region of about 7 to 8% upside for markets into the year end. Obviously, the recent move in market now has brought down that return expectation to about 3%, as I mentioned earlier. That is a year-end target because we are more homogeneous with what is prevalent in rest of the markets at this juncture. So within Asia, we are probably somewhere in the middle among all the 8-9 countries that we track there. We are slightly more constructive right now on China, Indonesia, more than, say, India at this juncture.
Okay. Well, Jitendra, what exactly have you factored in terms of crude gains for the oil sector itself? Are you still very constructive on that sector? We have got a Goldman Sachs report which gives Blue Sky's target of double their current price levels. Where do you stand on this sector? What are your favorite picks?
Sure. Okay. Again, that's a very interesting one because, energy sector, I fully understand the fact that, softening crude and what we have seen in the past couple of weeks should be really good for the fundamentals part of it. But having said that, I guess there are three probably things that one needs to take care about here. And it brings me back to our recommendation list here in terms of the names. What has happened is that although we have been constructive on ONGC for probably, and various other names here, for a good part of it, right now what has happened is that for the incremental triggers, you need three catalysts. Number one is the fact that you need to see how that drop in oil is going to benefit the two big stakeholders. One being the Government of India in terms of its fisc. The second being the oil upstream companies in terms of the under recovery. Now the issue is that I guess up till now, a large part of the benefit has been taken by the government in terms of a lower under recovery. So it's definitely good news for macro, but whether it filters through to corporate earnings is something we still need to see. So, maybe the next leg of improvement is where you will see that growth come through for the oil sector as such. The second issue has been in terms of the recovery construct itself. Earlier, diesel was the bulwark of that under recovery, and thankfully that is now brought down to a very, very manageable level, both by price hikes and secondly by the softening of crude. Now, on this issue, I would definitely say that, we need some more positive, constructive action on the subsidized areas of LPG and kerosene, because unlike diesel, of the remaining under recovery, almost 80-85% now comes from LPG. So diesel is no more the pain point. It's going to be LPG, and we need some corrective measures at this point of time to make sure that that reform momentum continues. A large part of falling under recovery and that benefiting in turn the upstream majors will be contingent upon LPG price action going forward. The third issue is this resolution of the gas price hike, where the government has already indicated that they want to bring in a new price effective 1st of October. Some clarity on that will definitely help going forward. So I guess these are the three things one needs for some more leg up on the sector from here on.
Okay. Jitendra, I just have one follow-up question to the point you made earlier, where you don't expect, more than a 5% upside from current levels. What could be the reason for that? Is it because the valuations of the Indian market have gotten too stretched, or do you think there could be some global event that could restrict further upside?
Well, I guess a bit of both. One part has always been that, India is definitely appearing like a slightly more over-owned asset within the relative context. We have seen a lot of inflows come in, and I guess it is still going to take about 2-3 quarters for the earnings pickup to start happening. Now, the question to ask is whether this baton passing from expectation uplift to earnings uplift is a very smooth one, or can there be some wobbles in between? It could happen that, the expectation uplift has already happened and maybe the earnings pickup happens a quarter later or 2 quarters later, and in which case you could see some pullback in the market as a result. The second issue is obviously to do with more with the currency and what the Fed is doing, and we have had issues here about the fact that we are getting more constructive on the USD, especially after the recent Fed action. So in fact, even in terms of the Fed funds rate, where we are expecting 3Q15, we are now talking about June 15 being the uplift in the Fed funds rate. Now, that is definitely a cause for worry, because a strong USD will definitely mean a slightly more muted flow coming into EMs. And the dollar indices has definitely started perking up. That not only impacts global cost of capital, but the other issue related to that is the fact that arbitrage money will find it difficult to play when yield starts moving up. So you could see some unwind of ARBs as well.
Okay. Jitendra, I suppose you know that our Money Control viewers can also ask you questions. So I'm getting one from them. This question is coming from Ravi Kiran in Mumbai. He asks, is this a good time to enter defensives like IT and pharma stocks? Might I add a little bit of my own, which, in case you are positive on these?
From a relative context, I would definitely say that we are getting more positive, on the industrials and the local economy plays at this juncture. And main reason being that, the last 4-5 years, performance has not been with them. So, obviously, ratings have fallen way below what historical levels were. Earnings and margins are much more muted. You could see much more uplift there. Now, the second part of it, the interesting statistic is that right since the election verdict, IT has been one of the strong performers in this market, despite the intervening period seeing a cut in guidance from Cognizant, and despite that event, we have actually seen tech doing quite well. Probably a lot has to do with the fact that, where market was seeing currency at levels of 58, 59, we have probably moved up to about the 61 mark right now. So that has obviously benefited the tech sector in overall terms. Now, we are more selective on tech at this point of time. I won't say that it is a case of, broad-based buying. We still like some of the names like TCS, etc. But I don't think it's a case of getting constructive about the whole sector at this point of time.
All right. I was going through your note. You've been extremely overweight on stocks like Voltas. Do you think it's too late to buy that stock now, or can one still get in?
This is a name that we have been backing for the last 1 year, and clearly we are seeing multiple triggers there. One, in terms of capex, the issue has been that we are not as constructive about industrial capex right now. I think it will still take some time to recover. What we are seeing a perk up is an infrastructure capex. So whether you say it's defense, whether you say it's metro rail, urban transport and all that. And I think some of these names have a lot of role to play there in terms of air-conditioned locos and stuff like that, or the carriages and so on. The second part is that Middle East as a block of revenue for a lot of these companies is showing some uptick in margins going forward. I mean, it could be individual company-specific instances where probably you are seeing a lot of the old low-margin orders now drain itself out of the P&L, and as a result, the new orders that are coming in are slightly better margins. But clearly, we see the margin uplift story quite strong, and also the fact that, we are seeing incremental prospect of new orders coming in from the local market as well starting to improve.
Okay. Well, Jitendra, how much are you watching what seemed to be a slow turning of events? I mean, Goa has practically restarted mining. We hear that the Supreme Court has directed the Environment Ministry to put out rules for early restart of leases in Karnataka as well. The nation, as it were, is weary of running after scams and is now getting back to work. Are you at least poised to include that in your earnings, or do you think it is still early days?
Well, I guess it will take time, but I guess some of the early signs, like you mentioned, are definitely positive, and some of the things that I started noticing upfront. One is just, take the budget session of Parliament. I mean, the fact that you have a majority in government is clearly showing through. The amount of disruptions you saw in Parliament is one of the lowest. I thought if I remember the stats correctly, we had almost 88-90% functioning of the Parliament this session. So it's one of the highest we have seen in recent times. Second has been this fact that, you have slowly started seeing those measures that you're talking about. Supreme Court asking a resumption of mining and so on. I guess a lot of these things are the nitty-gritties that we want actually. It's not about big policy announcements. We've had lots of those and frankly very little implementation in the past. What we need is the operational glitches to be removed so that, the money can actually start flowing into the ground. And that is where I guess, the focus and attention needs to be.
Okay. Just one more sectoral view on the auto sector. You've had a lot of recommendations over there, but after the run-up, what are the stocks that you would still hold on to?
Well, our top pick at this point of time in the sector is, a name like M&M, which we like. And by and large, I would say we are constructive on the whole space because you have had 2-3 years of relatively muted growth, both in passenger cars, also in terms of, the high cost of ownership because of elevated interest rates, which may not turn in the near term, but, potentially 15, maybe the second half onwards, you could see some easing in rates come through then. And these would help in terms of fueling demand growth. So that is an area that we clearly like. So auto is something we are definitely getting constructive about, but in terms of the slotting of or the ranking of names, I would still be slightly more positive on capex-oriented plays rather than being more on the passenger segment, because passengers had a good run of performance behind it.
Okay, so you name names, please.
M&M is clearly one name that I mentioned is our topic. We are constructive on Tata Motors as well.
All right, fair point. Thank you very much, Jitendra, for taking us through all the micros and the macros of the market. And